introducing to you the areas, that we will cover in this class. Then you move on to part B. Part B also talk a lot about ethics. That's part of it, and also some of the considerations like liabilities. In this context, ethics, this is also one of the areas of very popular questions tested. And then we will do a short quiz, all right, after part B. And then we will move on to practice management. Practice management actually covers this big area called quality management. 2 years ago, in Singapore, we actually issue SSQM, all right, to enhance the quality of our auditing process and also audit reporting. So this will be covered under Part C, and then Part E covered all the other assignments that the auditors may actually do. And this is also the kind of areas where we call limited assurance work, all right, to be done. So this is the things that we will cover. Let me speak a little bit about our paper, all right. The paper is already scheduled, by the way, all right. The actual exam is scheduled, if I'm not mistaken, is in June 18th, all right. And this is an online paper, all right. And running up from today, all right, April all the way to June, we have lined up live webinars every week, all right, almost every week, to cover all those important areas. You can see that from the sessions that we are going to cover today, the components, you can see that Part D is actually omitted. So Part D will be covered starting next week, all right, onwards. Part D is a big element, big components in the BPASR, and it could actually command as much as like 50 marks, all right, for just Part D alone. So Part D is actually a very big area. And then you can see that Part F is also omitted here. So we will cover separately in our future sessions. And also Part G. Part G is actually our current issues. All right, so tentatively, this is how we're going to cover this. This paper actually consists of 4 questions. Each question is 25 marks. The examiners boards are expecting to issue the tips. So the tips is actually a very important source of information to help us in our exam preparation. But at the moment, ASR tips has not been issued. So our lecture will cover the salient features and all the elements that is popularly tested in the past sittings, right? And as we move on, and when we get our ASR tips, we will discuss about it. All right. So at the moment, we have not received the ASR tips. It has not been announced. So I'm going to share a different screen now. All right. Just wait for a while. Let me share a different screen. So this screen actually talks about Part A. This particular document, all right, you can download from our Google Classroom, all right? So this is the exact same copy. Right, so I've turned on my camera. Okay, all right, let's take a look at Part A. All right, in this Part A, what we do is, this is the area that we want to cover. You can see my cursor, all right, that is moving. Wait, I can actually open my annotate bar. All right, so now I'm using a spotlight given by Zoom. So you can see that this in Part A, this is what we will cover. We will talk a lot about our governance that is created for our accountants and also auditors. So this part, you can see that I'm circling here. IFAC actually is a independent body that issues accounting standards. Our financial reporting standards actually adopts from those financial reporting standards like IFRS and also IFRS for SME that was issued by IFAC. All right. So under IFAC, we have IAASB. They are responsible to issue IFRS and also IFRS for SMEs. Singapore actually adopts their financial reporting standard. They have another body that is called ISBA. ISBA actually issued a code of conducts or code of ethics. All right. So the code of ethics that is adopted by ISCA, which is EP 100, actually adopts the documents that is issued by ISBA. All right. In Singapore, in our local front, we actually have two very important governance. One is CRA, which they are also the regulators that is responsible in registering companies, all right, private limited and also non-private entities. And APRA is also the governance that look into auditors practice management. So they also look into this. Later we will discuss more on that. Then here comes ISBA, ISCA. ISCA actually is the governance oversighting on some of those um, uh, regulations issued by ACRA. Say, for example, like um, the members of accountants, like chartered accountants. ISCA is the one that is managing this. And then the code of ethics and code of conduct for all the accountants and also auditors is also managed by ISCA. Okay, ISCA is also the governance in issuing our auditing standards. So auditors who are practicing and having a practicing license will expected to use all the auditing standards. Together with auditing standards, ISCA also has other types of documents like SSQM. All right, so this is also one of the documents that we will discuss today. Public oversight. All right, this is where you sometimes will hear discussion about PCOB. All right, this is where you can see that there is a public oversight on the work of auditors too. But this is the public side. So in US, we have PCAOB, and in Singapore, we also have an independent body called PAOC. All right. In sorry, in the smaller front, which is the entities, you can see the entities, their own governance actually from the audit committees. You can see the audit committees are expected to review like the risk management, all right, the auditors' responsibility, understanding. So audit committee actually have a lot of communication with the auditor here. And of course, they also look into some of those areas of high risk like compliance. All right. So audit committees carries this kind of duties. We also will look into internal controls. All right. Today, when we talk in terms of internal controls, we also looking at some of those areas that we can see in our audit client, the performance of their internal controls. So this is the activity that we have lined up for part A. All right, we will cover generally the type of assurance engagement. All right, then we will talk a little bit about ethics and the important regulators. All right, these regulators needed to have a lot of governance, and some of those governance will be actually mentioned. Some of the governments that was issued includes like the auditing standards and also the ethics, right? So these some of those that we will actually discuss. In Singapore, we also talk about how we do our public oversight. We actually do that. In Singapore, we actually have this thing called practice monitoring. So later we will discuss more about this. All right. That's activity 5. We'll talk about audit committee, which is on the audit client side, and how they will actually communicate with auditors. Audit quality indicators talks about internal controls. So we will talk about the internal controls of the auditors first. Then we will also talk about internal controls in the audit client side. Okay, and then we will look into the responsibilities of management and auditors in that perspective. There are some of those changes that is made few years ago about the responsibilities of management and auditors in responding in discovery of non-compliance to laws and regulations. These changes is only made about a few years ago, and now there is a requirement that as being expected that auditors need to do reporting. So in this activity 11, we will show you which is the areas and how do we actually go about to deal with this. All right. 11 and 12 are connected. It talks about reporting of non-compliance. Okay, and in 12, we specifically narrow in as to like how we are able to do our reporting of non-compliance. All right, so activity 11 talks about the needs, and activity 12 talks about how we are going to go about to do our reporting. We touch a little bit on money laundering. All right, and money laundering as a individual topic has gained a lot of traction in Singapore, mainly also because there are also some recent cases in Singapore that is being reported. So this is also one topic that sometimes is being tested too. So auditors also has an obligation in reporting money laundering suspicious transaction. All right, so we will also cover this. And I would like to show how some of these theories that we will cover are related in answering questions. So for this part A, we are going to demo two questions that is extracted from past year questions. All right. Let me begin with the first activity, which is type of assurance engagement. When we talk about assurance engagement, we are talking about from the audit departments. All right. So most of the things that we will discuss here talks a lot or circling around the auditor's work. All right. And over here, generally, there are two types. There's called reasonable assurance engagement. So this is most of the time that we talk about audit assurance job. Okay, but reasonable assurance engagement, the level of assurance that we need to give is actually quite high. Okay, so it must be work that's performed, all right, testing that we perform to help us to reduce the risk to a level that is acceptable, and we can form a conclusion for the overall financial statement. So reasonable assurance engagement, the audit testing is quite extensive if you ask me. All right. And if the audit client is actually high risk, you can see that the audit testing is even greater because you need to do more work so that we are able to form an audit opinion. Limited assurance engagement sometimes is also a work that an auditor may actually accept. Okay, but we use the word limited assurance because we are looking at a very specific area. Okay, and we only need to do a certain review depending on what the client wants the auditor to do. Under this kind of circumstances, very likely the work is a non-audit related. Okay, but the risk is actually quite great because there are limited work that is done to ascertain a certain conclusion, all right, that need to be given. Okay, most of the ASR tax covers on reasonable assurance engagement. So it's only in the part A that we introduce the type of work that an auditor may actually accept, all right, in their course of work. Okay, so in assurance engagement, usually there is this kind of important elements. There is a three-party relationship. All right, it could be a subject matter. It could be also the client that appoint us, and we as also the assurance provider. And usually there is a specific area that the client wants us to look at that is called the subject matter, and they will lay out certain expectation, or we call it objective. Over here is referred to as suitable criteria, and it is the job of the assurance team to able to do the testing so that they are able to collect the evidence to help them to form a conclusion, or we call it an opinion. So the opinion will be written in the assurance report. So the end product, yes, you're right. The outcome of this is actually the assurance report. And then we are now from here, we are going to move on to the second activity, all right, which is over here. We will talk about the why is it so important the assurance engagement is carried out within the context of professional and ethical standards, and how these are being regulated. Okay, so generally, this is a kind of work which is that is very there's a lot of human work that is involved. So that is why we need to ensure that the people, all right, and from the assurance providers remain to be independent and objective. So that is why it is quite common that there will be a lot of oversight on the work. Okay, so some of these assurance engagement are carried out in public interest. Say, for example, the subject matter, it is a charity or it could be also a listed company. So that is why it is for the assurance provider to demonstrate how the work is being done and we follow a specific gold standard, all right, in terms of the work and also the ethics, all right? So when the assurance providers conduct audit services, all right, it is actually regulated, meaning that there are processes, standards that has already been identified, and all the auditors are expected to follow the same processes, regardless of whether uh, who is the audit client. So in every country, we actually have rules that is already set up. So all these rules we will cover in the following activity. So who is the person that actually issue all these rules? So the first one is actually ACRA. ACRA is the short name for Accounting and Corporate Regulatory Authority. All right. So this is one single national regulator that talks about the registration of all the business activities, how all these business activities like companies, how they should do reporting, and also public accountants who are responsible in doing their audits. Right. So ACRA and ISCA actually are closely related because there are some of those standards that is issued by ISCA is also referenced to CRA, okay? And there are also some of those instructions that is coming from ACRA that is also referenced in ISCA's work. So both of them are actually closely related. Okay, I've already pasted the link here, but I'm not going to show you the website. There's so many screens that I need to open. But the link is here, and this link is actually active. All right, it contains the actual link that are able to bring you to the website. Okay, the next regulator that you probably have heard is the ISCA. So this is where many of us are looking forward to become a member of ISCA, and meaning when you qualify, you can become the chartered accountant in ISCA. Here is also the website. So ISCA actually given the power enforced under this Accountants Act to able to come up with certain rules that they can so-called uh, award the membership, all right, as an accountant. So first, the definition of accountants come from the Accountants Act, but ISCA is actually the governance, all right, that awards these chartered accountants credibility, all right. Besides that, ISCA also issue the audit and assurance standards. In Singapore, we call it SSA, and in our Part D, we actually cover a lot of SSAs. Okay, so usually during our session in Part D, there will be many reference that will be referred to SSA. So to help you, to give you a head start, I've given you the link. That is actually a sublink connected to ISCA that you are able to have a first hand to see the list of all the SSAs. All right, so I've given the link here. Moving on, let's take a look at the standards that is adopted. So there is these two very big international standard setting that play a key role in what that is being adopted in Singapore, because the documents and the governance issued uh, by these international bodies is actually adopted in Singapore wholly and entirely. So this convergence also means that Singapore is actually meeting the goal and the global standards that is required for all accountants and auditors. All right. So our SSA is actually adopted by ISAs. All right. In Singapore, we use the header of SSA, but the contents is exactly the same. All right. And our EP 100, it's actually adopted by the International Ethics Standards that is issued by ISBA. All right. But of course, in Singapore, we have renamed it as EP 100 Code of Professional Conduct and Ethics. But it's actually 100% identical. All right. So I have clipped the link, all right, for you to able to see the EP 100. Okay. Some of the contents of the EP 100 will be covered in detail in the subsequent component. All right. So at the moment in part A, it's just very much an introductory session only. All right. Let's take a look at the public oversight. I probably spend a bit more time here because this is the area whereby it has a very significant influence on the coming ASR exam. All right, let's talk about practice monitoring department. So under the public oversight of Singapore, under the supervision of ACRA. So ACRA actually governs this department. They have a department that do the administration of PMP, or we call it practice monitoring program. So this actually aims to so that all the audits in Singapore will achieve this high quality audit and also corporate financial reporting. All right. So not only we follow the gold standard, we also have to make sure that there is compliance and we meet this objective. This is the reason why PMP was set up so that ACRA has the power and also the influence to review the work of all our auditors, regardless of whether you audit a listed company or non-listed. All audit engagement partners that are licensed required to be audited. And not only the individual, the firm also will be audited, okay, to see whether the firm provides the necessary environment for the audit, yeah, to be carried out to fulfill all the standards, So it's more than just SSA. There are many factors that is necessary to achieve good audit quality. So later in the following chapters, we will cover that. All right. So that's PMP. And PMP throughout the years, so it has started for many years. And in recent years, which is last year, there's a change of in the regulations, which now, first thing first, the PMP reports has been renamed. So it's called Audit Regulatory Public Reports. So the old reports that was issued remains as the name of PMP, but the objective remains unchanged. All right, they still want to fulfill that. But ACRA has now changed the law to allow ACRA to have the inspection powers in the accounting entities. So if there is a specific reason that is needed, the ACRA actually can send the inspector to the accounting entities to do quality control review, because the quality of the accounting process in the accounting entities has a significant influence on the audit quality from the audit firms. So it has been extended. All right. In exam, we don't really test you what happens inside the PMP reports, but the PMP reports is an important source for us to understand the current issues in Singapore. All right. So this is where sometimes there are exam questions that focus on those areas that is highlighted in PMP. All right. So, but we will not be covering today. We'll be covering this in the future live webinars. All right. This is the link for you to take a look at how and where you can extract and download the PMP. All right. But at the moment, I did not actually show any of the PMP here. So this is very much remains as an introductory course. Yeah, there's a question, is it accounting entities means audit clients? Yes. So say, for example, say, like, sorry, let me just move back a bit. Say, for example, PMP, or now called Audit Regulatory Public, Audit Regulatory, they come and audit your firm, say, all right? And then they selected this job, okay, this entity called Company X. And during the review, they found that there's a lot of written representation that the management say they say that. And ACRA wants to cross-check with your audit client. Uh, since 1st July 2023, after the Act has been revised, ACRA now has the inspection powers. They can actually communicate with your audit clients. All right. So I just want to give you an example, and I hope I answer your question, JR. So let me know whether that's good. So, but this is something new. So some people say, oh, it's so uncommon. Yeah, yeah, yeah. Because this is just started. The main reason, so when you read some of those journals, the main reasons that ACRA want to extend these inspection powers is that it allows them the ability to investigate. Especially, they want to verify and validate some of those uh, audit evidence that you collected and you noted in your audit working papers. They want to validate. So that is why they extended this power. And I think this is very much relevant, so that they are able to have that transparency that is needed for their work. Other than that, ACRA also has a lot of powers. You can see that they do public oversight, all right, the professional oversight. So they do actually reprimand, yes. So they are, I mean, some of those audit quality has not meet their standards. They do actually reprimand uh, the uh, the engagement partner, all right, which is responsible. And also, to a certain extent, it also may affect the public accounting firm too. All right, so they do take disciplinary matters under their hands. They do look into this. Okay, so all the audit firms in Singapore, they are aware of this. Let's talk in terms of the client. Now we are moving on to audit committee. All right, let's take a look at the role of audit committee. So this is the best friend of external auditors. So most of the communications that the external auditors has, especially on auditing matters, like poor internal controls, or there is a lot of audit adjustments, the person or the governance that you usually communicate in the audit client side is your audit committee. There are times that we always refer in our SSA, they say those charged with governance, very likely is actually the audit committee. Usually audit committee, they have an audit committee chairman, all right, and the chairman will be the person that will lead all the discussion. Okay, audit committee and the audit committee chairman, to a certain extent, they are independent from the operations to a certain extent. I know they are also part of board of directors, but to a certain extent, they are quite independent. And this is where our main communication will be directed to. You can see that it carries a lot of governance and support, because in the Companies Act, you can see that in Singapore, listed company is a must to have an audit committee. It is a must. And then you can see that in the Code of Corporate Governance uh, that was issued, they say that this is the work that is expected from the audit committee. So for them, they also are responsible for the company's internal controls. Yes, we don't expect them to do the internal controls, but they at least has to review and provide the oversight on the internal controls. In other words, that if the company has a poor internal controls and all this, the audit committee actually has a say in this, as exerting their influence on how to improve on those poor internal controls. Okay, now we will start to understand why in the later part, when we cover part D, why when there are poor internal controls that are identified, we are also expected to inform the senior management and also those charged with governance. That is actually referring to audit committees. Okay, let's not forget that when the client has poor internal control, it has a significant impact on our ability to do audit. Yeah, because the audit evidence that we collect we we probably has doubts. We are not sure about whether it's reliable or not, because the source of the audit evidence or information come from accounting process that contains a lot of poor internal control. So it has a direct impact. All right. Aside that, the audit committee also expected to take a look at the external audit, and also if they have internal audit, the internal audit function. There are some of those areas that when you do audit planning, there will be a discussion with the audit committee chairman too. All right. So there will be a discussion on where are the areas that the auditors will audit, where are the focus. There will be a lot of two-way interactions and communications that will command this need on how much, where is the audit focus, and so forth. And of course, when there is any financial issues, financial reporting issues, and all this, the the part that that need to be discussed, audit adjustments, and all this will be focusing to the audit committee. That is the area, that is the person, that is the department that will look into this. So this is how we communicate. All right. When you link this together with our relationship, you can see that uh, aside the audit services, if I mean for whatever reason, um, the the audit client wants the auditor to do some of these non-audit services and all this, the audit committee and also audit committee chairman are supposed to review to see whether it will have an impact on the objectivity of that audit services that to be provided. All right. So he has to take a look at that. So in other words, some of these ethics issues, like independence issues, from the auditors, it has to be addressed through the audit committee, right? That's also the reason why most of the audit committee chairmen, they are usually they are ex-auditors most of the time, retired auditors, yes. They are very suitable to do this job because they come from that world too. All right. Let's talk about audit quality. Later, we'll cover this in more detail when we talk about the SSQM1. So this is just a very broad view, all right? So you probably know because I expect many of you here who have working experience in your firm, you probably have seen like how your firm has structured this framework to manage your audit processes, all right, that is going from job to job one. Usually we go for a job assignment. So usually there is altogether 7. So when ACRA evaluate the practice management or quality management, they will also look at these 7 angles. All right. So they will review on the job specific and also on the firm wide. Okay. On the, say for example, when they selected a file, they would look at the audit hours. They will see whether the hours is sufficient or not, and how the time is being spent. Do they actually focus on those high risk areas? You know, whether they practice risk based assurance or not. This is also one of the areas. Whether you actually use the appropriate resources for the audit. So they also look at the experience, the training, you know, whether you know some industry specific knowledge or not, especially if you audit certain more complex industry. What sort of training hours that was uh, carried by the audit staff? All right, so this is also an area. What is the inspections, you know, quality management, the head count? Are we understaffed? Is it too many staff under one partner, too many staff under manager that resulted poor supervision? Is that also the kind of problem which is very high attrition rate? So generally, high attrition rate is not good for accounting firms. If you ask me, it's not good because it takes time to build capabilities in an individual before the individual can actually able to demonstrate its capabilities, and the person will resign. And when there is a vacuum or we have a shortage of staff, that's where it applies pressure on the job, not able to fulfill the hours, audit quality maybe will be compromised. I'm just saying, right? So this is already some trend, and most of the time we actually can see it. All right. So in the past, Accra do issue report on this area. Okay. And in terms of quality management in Singapore, we issue two SSQM at the moment. So later we'll cover a little bit more in detail. But SSQM 1 and 2 only came effective on the first 15 December 2022, effectively 2023. All right. And there is a structure that will be that are given on what is called quality management. So I think this guidance is also important, especially for all types of firm, big and small. What are the areas that they need to build on? Okay. Some very big firms like the big fours, the SSQM is not a problem for them because they already got SSQM already before SSQM was issued. All right. But there are some firms, the smaller firms will have this kind of challenges. But for the big firms, the big four and all this, they probably now you can see that how they are able to fulfill these four key areas. All right. How they manage their risk, how they identify the risk, how do they manage some of those very key areas like independence and ethics, what are the processes, how about the training, learning, and development for the staff, the people. All right. This is where they will bring in people management, or sometimes we also call human resources. Quality assurance is the SSQM that has been identified. They do set the standards. If you read SSQM 1 and 2, they did highlight what is called good quality. All right. Later, we will actually extract some of the parts to show you in C. All right. But at the moment, we just are going to introduce SSQM to you only. All right. SSQM, yes, is here to stay for sure. We encourage a lot of modernization in terms of using technology. There are many big four firms, they actually use e-audit, all right, and they have a system that generates audit processes, audit procedures. They also use some of those external service providers to help them to do bank confirmation. This is also some of the things that is happening in our environment. Okay, they use also different automated auditing techniques like saying data analytics. So data analytics is something that the regulators wants the firm to use, all right, because of the accuracy, all right. In fact, in part D, some of our questions that is being tested, they actually give you data and then they will ask you to search for some of these errors within the data, all right. So they do encourage firms to do that. We want the firm leadership to take more responsibilities and accountability, all right. It means that if there is any problem or issues, poor quality, it is not because of an individual. Like, oh, it's the audit senior's fault. It's not. It is the whole firm. The whole firm leadership has to take responsibility. So I think previously, before SSQM was issued, I mean, the blaming, oh, it's not my fault, So now it has been cleared and it has been clarified. It has been noted down like this. So they want a processes that is very rigorous to manage the quality management within the firm. And if they identify any deficiencies, how do they actually uh, remediate or correct it? And how do they ensure that this will not happen in the future? All right. So this is some of the areas that is being expected. So it's not just writing a policy. They probably will come in to check to see whether this is actually carried out. So SSQM was issued in December 2022. So 2023 is 1 year that they expect the firms all to back up to present this. So it means that in the future, when Accra comes into audit, they will actually use SSQM as their gold standard in their auditing. All right. They also want to see whether the firm are robust or not in their own quality reviews, So quality reviews is one of the methods that we use internally within your firm. I'm sure your firm has it, all right? But the name could be different. Here we use the word engagement quality review, but some of the firms they call P2, like the second partner review, which is a partner other than the engagement partner. All right. Sometimes they call it peer review, so each firm has their own name. All right. But generally, it means the same thing. So in exam, we will use those words that is referred in the SSQM. So this is the link for you to download SSQM if you wish to take a look. From here, we're going to look at internal controls. All right. And generally, when we talk in terms of internal controls, uh, the internal controls of that particular audit client is actually the responsibility of the board. So here, I think they specify it so that they put the accountability and also the work to the people that has the most influence in the particular entity. So over here, when we talk in terms of a system of internal controls and all that, we look into many areas from transaction to assets. All right, and these internal controls has a very strong connection to the output, which is we are going to audit. So we're going to audit the financial statements, right? But the financial statement is actually a report that is generated from the accounting processes. So the accounting processes are expected to have good internal control so that we are able to ensure that the data, the information, the reports are actually generated, are reliable, and it is suitable for us to do audit. So in some of those areas where there are poor internal controls or the management also has poor integrity, this is actually considered as a very high risk audit assignment. Okay, so in most of the questions that are being tested in ASR, it has a strong connection on that. And the question, many times they will highlight to you, oh, they have this problem. The management, uh, told you this, then after they tell you that. So they are trying to give you case studies so that you are able to apply and identify the problem. All right. From here, they will be looking at the responsibilities, all right, of the management auditors on the internal control. So for the internal controls on the companies, ultimately is the board of directors. They are responsible for that. And for the auditors, okay, um, we are supposed to do the testing. So in part D, we'll look into this, how to do the testing. We'll look at those major components. All right. Um, the audit assurance report that we issue, we do not give a full guarantee as long as it does not have material errors, material misstatements. That is called a good report to go. All right. But we actually depend a lot on the ability of those internal controls and processes. Okay. In terms of law and regulations, all right, the management and the auditors, they actually has their own responsibilities in terms of law and regulators. In terms of management, they're expected to comply. When you talk about compliance, the set of rules that they need to comply, it could be various because it really depends on the industry. So when you talk in terms of compliance here, it's not limited to financial reporting standards only. All right, there's many types of compliance. So your understanding on the audit client's business environment, the compliance needs, and all this is important, especially during your audit planning. Okay, as for the auditors, they are not supposed to be held responsible for preventing any non-compliance because our audit assurance does not cover uh, preventing of non-compliance. All right. However, please remember that there are some of these non-compliance has a close relationship. All right, that it will drives the risk of material misstatements. All right, because they don't comply with certain standards, the material misstatements could be higher, especially if it comes from a specific controls, it can come from a specific department. All right, so under this kind of circumstances, all right, we need to be aware that how this has an impact on our financial statements. All right, in that aspect. So in terms of auditors, end of the day, we do our audit testing. Okay, we need to collect the audit evidence so that we are able to provide an opinion, all right, on the financial statements that is being issued. All right. So later we will discuss about what type of audit opinions. All right. But at the moment, this is the job. However, however, if during our audit, all right, we do actually identify any non-compliance or we suspect of any non-compliance, we are expected to respond appropriately. All right. So that you have to remember. So there is actually a strong connectivity. All right. Reporting non-compliance, we are being expected to do that. How are we going to do that? All right. The first one, you are under SSA, you're expected to report to those charged of with governance. So depending on the entity, it could be audit committee. All right. But for private entity, when they do not have committee, then they will report straight to the board of directors. Okay. We those charged with governance usually is the highest level, the level higher than the senior management. Okay. And they actually need to explain and specifically where is the non-compliance with which law and regulations. All right. And what we can report actually depends on what that came across during our audit. It has to be consequential. Those who are inconsequential, there is no way for us to report, right? Other than that, another way that we can report is also through our audit report. Okay. Over here, we are not going to cover audit report in detail, so we are just going to show you that this is one of the areas that we can highlight. All right, we can bring this to the attention of the user of the financial statement. All right, and the auditor that identified this non-compliance, they should consider whether they need to report to the authorities or not. Okay, and establish the responsibilities. All right, whether they should report, and sometimes the auditors may want to seek legal advice. All right, under this kind of circumstances, money laundering is also punishable in Singapore. All right, and in Singapore, when we are doing audit and all this, we are actually expected to review during our work review whether there is any suspicious transaction. And in Singapore, we are expected to report the suspicious transaction to CAD, which is Commercial Affairs Department. All right, and we should be putting some of the controls in our firm to address all these money laundering concerns, meaning how we are going to escalate it. We should put some processes in place to deal with like customer due diligence. The people that is the first line of defense are expected to go through training so that they are able to identify this high risk. So in Singapore, we have EP 200 that was issued to guide us on this area. So quickly, I'm just going to show you some questions, all right, that could be tested in this area. Past year, December 2018. So it's referred to this company called Kool-Aid. It appears that the company revenues for last year and this year have exceeded 1 million, which is the criteria for compulsory registration for GST. Therefore, Kool-Aid has to be registered. However, GM claimed that he was not aware of this requirement. Company has one registered director who's the founder of Kool-Aid. However, he visits Kool-Aid occasionally as he is a retiree who enjoys traveling, thus he's not in Singapore. Discuss the audit responsibility when there is a non-compliance with the law and regulation by Kool-Aid. In this case, we are talking about not registering GST license and also they never pay. All right. So what is the implication of financial statement? So first thing first, there could be a payment that need to be paid and also penalty. So we need to identify how much is the amount, all right? And we will tell client to adjust it. If the client doesn't want to adjust it, then we have to consider how this will impact our audit opinion. But if it's corrected, then it's not a problem, all right? And we also need to discuss with the directors, those charged with governance. So in exam, you either use the word the director, so the examiner will understand that it's those charged to governance, or you can just use the word those charged with governance, and then they are supposed to do a report and file, yes, right, so that they are able to do the GST penalty and also onwards report and pay the GST. June 2019 talks about suspicious transaction. James approached the firm ethics partner to discuss an unusual request from audit client Laundry Monster. The finance director of LM called James on the phone to inform him of a mistake. LM has made a duplicate payment for an invoice on audit fee, and the audit has been completed. Duplicate payment was made from LM office. Finance director has requested YO to refund the duplicate payment to a person called Felix. So instead of back to the company, they want you to pay to an individual. Upon further inquiry, James was told that Felix is the purchasing director of a company that is a customer of LM. LM just secured a large contract from his customer. And the ethics partner preliminary thought that this scenario looked very suspicious. All right, it looks like money laundering. It looked like fraud like that. Okay, so discuss the appropriateness of YO communicating the suspicious transaction to those charged with governance of LM, considering the requirement of SSA. Okay, so for money laundering, it's slightly different because when you want to communicate this, which encouraged by SSA, but you have to understand that it may be tipping off. How you know that whether did they actually uh, was involved with the director. So this is some of the areas that we need to be cautious. All right. So we have finished this. I just want to ask, do you have any questions? Do we have any questions? All right. So I would like to move on to part B. All right. So this is ethics. All right. So in ethics, I will begin by showing you what are the important areas in ethics. And then after that, we will continue with some practice question and we will do one quiz. So let's talk about the fundamental principles, and then we'll talk about the framework and some of those areas like independence, and also when is the time where sometimes confidentiality will be modified, all right, under the law. So we'll talk about this. So this is the 5 fundamental principles, all right. If you extract EP 100, you're able to see these 5 fundamental principles, all right, which is integrity, all right, which is we expect the member to be honest, straightforward, okay. Objectivity means we are not supposed to be biased, okay. If as much as possible, try to avoid conflict of interest and should not have any undue influence that will override our professional or business judgment. All right. So the objective is the one that we need to meet. Okay. Professional competence, it means that the members are expected to have the consciousness to go for classes, improve their skills so that they're able to carry out the work. And if they are actually uncertain or not able to do it, they must have the professional due care to ask for help. Yes, we are expected to do confidentiality at all times, but later we will show you that sometimes there are some of the aspects whereby we need to do some reporting, which I have explained previously, where we need to do our report, especially when they come to non-compliance of law. All right, so this is one of those areas where we are not able to adhere fully confidentiality. Professional behavior, we should not do any actions that would put or discredit our profession. Okay, this is the 5 areas that we will create threat. It means that we are not able to fulfill this one or all the fundamental principle. Okay, self-interest threat, meaning that you compromise or you become biased because you have a financial interest. All right, say for example, client give you discounted goods, allow you to buy discounted goods. Self-review track means that you probably are auditing uh, financial statements that previously prepared by you or a system that was advised by you. Okay, advocacy track, all right, talks about you promote something so much so that it will compromise your ability to become an auditor. Say, for example, like promoting shares. Familiarity track talks about the long association until you have reduced your ability to exercise professional skepticism. Intimidation threat is when you have the fear, you dare not disagree, or or you will get retaliation, like losing your job. That's called intimidation threat. So our EP 100 is modeled after conceptual framework, meaning that we always follow this process whereby we begin by identify the threat first, and then you evaluate whether the threat is above your acceptable level or below your acceptable level. If it's above your acceptable level, you are expected to make efforts, all right, to address and eliminate those threats. Ethical framework to a certain extent is very useful, all right. They expect the member itself to seriously consider independence, ethics in every given situation, all right. There is no checklist because they expect that there is no two situations of the same. That is why they expect you to apply these principles as and when that is needed. All right. So, end of the day, the conclusion that needed to be reached has to be the one that is deduced and also concluded by the accountant itself. But ethical framework has a problem because uh, you are expected to conclude it all by yourself. That in this kind of situation, there's a lot of professional judgment that is supposed to be made. And sometimes the professional judgment may seem to be incorrect. And when it is discussed with another accountant. So sometimes the ethical framework application and all this, the way it's applied, it varies because accountants, they may actually have different background and they may see it differently. All right. So after for a while, you will see that it looks like the members has a very inconsistent approach. All right. Although they follow the same ethical framework. But we do have safeguards. So in the firm, we actually have a lot of safeguards. In the profession, we have a lot of legislation, regulations. People in this industry actually expected to go for training. We do, all right. And in the firm, there are policies. So leadership do stress on the requirements of independence. I'm sure in your firm, you probably hear a lot of this town hall announcement on this. There are a lot of policies and procedures that is written for this purpose. Okay. During your engagement, there will be also a lot of emphasis on this. Okay. So that there is sufficient of review, to ensure that these fundamental principles are not compromised. Okay. So now you start to see the importance of some of these rules that is applied in the firm, like, oh, that is required to rotate. Why? Because we want to reduce this familiarity threat. That was the reason for it. So some of these things we do it not because we want to have fun, okay? Or we want to torture you. No, it's not. Because there is actually a genuine need for this, right? When we talk about independence, there's two independence that we need to demonstrate. Of course, the most important one is the independence in mind. So it means that the way we arrive to conclusion, it is actually demonstrating objectivity and sufficient professional certificate. And this is the truth. All right. And in order for us to demonstrate this is a requirement for all auditors to document this, how you arrive to the decision. So you speak your mind by writing it. All right. So there's independence in mind. Other than that, auditors also need to do independence in appearance. Never put the firm or yourself in the situation whereby a third party, when they see it, they will conclude or assume that you have already compromised independence, objectivity, or integrity. Never put yourself in the position. So independence in appearance to a certain extent is not so easy to comply. because the firm has to put in a lot of processes, a lot of education, so that people in the firm are aware of this. All right. And especially if you are doing audit assurance. Okay. Other type of assignments may be less. There's a high expectation on independence, especially if you are doing auditing, especially if you do auditing for PIEs, public interest entities. Okay. Confidentiality, this is also a key area. So I think we don't have to explain much. I think we don't disclose. All right. However, we do have exception that we have discussed previously. All right. Say, for example, it's required by law, you need to do reporting to the regulators, or you are summoned by the law. So, say, for example, you receive a subpoena that you need to present in court. But most of the firms, including your firm, we actually have a legal counsel to advise us. Okay. I'm going to showcase to you some of those typical compromise on independence. All right. This is extracted from the practice question. So I just want to look at the case and then how we want to deal with it. Dakota is a major client, is listed. Audit firm consists of 8 members. Charlie, the audit assistant. Charlie has just invested some personal pension plan in this particular client. How do we deal with it? All right. Second case, the head of team carrying out the due diligence at Geely, a public company, which your client Tilly is considered taking over. Your second in command of the team has confided in you that the course of their work, they have met a sibling of the managing director who's keen to invite individual on the date. So there is some self-interest, all right, in that sense. Your longest standing audit client, Happy, which have been involved in 10 years, an engagement partner. So ask you to go for the cruise. And so let's talk about how do we want to evaluate. All right. So I want to ask the class on the first case. Okay. Is it okay to invest? So in the chat, maybe you want to try the first case. Kota, is it okay for us to invest? So you can use the group chat to answer. Is it okay? Is it okay? So, so this is where first we identify the threat. So if you look at the conceptual framework, then you have to evaluate whether can or cannot. So I'm asking this question because in the exam, when you hear the word evaluate, means can or cannot, and then you're expected to explain. All right. So in the exam, beware of some of those words like comment, evaluate. There are certain expectations that is set from the examiners. All right. Let's take a look at the first answer. So there's self-interest over here, okay? But we need to evaluate whether this is excessive or not, all right? How much is it, So in this case, we need to assess, all right? So these are some of the questions that you will ask. The second one is that this is a work that you have done before and then now you want to audit. So there is self-interest track, all right, in this case. So we need to separate it. So there's some changes in our EP 100 recently, about 2 years ago. If there is a self-interest track and that company is listed, say, because in this case study they did mention, okay, if the company is listed, so the auditor cannot do any non-audit services. It's already said, all right. But if the company is not listed, it's not a pie, okay, it's not listed, then you can evaluate. All right. So there are some changes in the EP 100. Okay. So you also need to consider the other factors, whether it's a key staff, how do we want to separate the work, so you need to evaluate. All right, how can we ensure both the teams are two group of people? All right, so these are the areas that we can take a look. Okay, we can also ask a second partner to review. All right, quality review, to see whether there is any uh, uh, self review track or not that exists. All right, we can also review that. Okay, and in terms of the cruise, uh, actually it's not appropriate. Our cruise is not appropriate. All right. It looks like very familiar, and I know sometimes if you're talking about, oh, this is a business relationship, but in our ethics, we take this very seriously. Okay, so and we actually need to inform those charged with governance about this matter. All right, if there's really a need, you need to reimburse the cost of the cruise. All right, to the managing director to show that you did not enjoy the benefit. Other type of questions, it could be also something like this. All right, SPG. This is a recent presentation. All right, it says of financial journalists. Okay, give a very optimistic forecast, suggesting revenue would double over the next 3 years. CEO has prepared the forecast in a hurry and not had it checked by anybody. They did not mention SPG tax authorities, considering taking legal action against SPG for understatement and underpayment of taxes. They never disclose. So when you are doing this kind of work, and if the client is not honest, they not inform you, this is a very serious matter. All right, it will actually has an impact on our ability to give an honest opinion on the conclusion. All right. And continuing from the legal case, the government has obtained a court order that all documents related to SPG export trade should be made available to the government lawyers. Many of the documents covered by the court order were the subject of confidentiality agreement between SPG and various entrepreneurs. So can we actually allow the government to use these documents now? Remember, we have confidentiality. All right. Situation 3 is different from situation 1 and 2. It's a joint venture, all right, with another company called AMS. Under the terms of joint venture, all right, it makes regular returns, all right, and it's late in making its returns, all right. So this is a non-compliance, and due to the many problems, uh, they have advised to discontinue the joint venture. So in this case, the decision to discontinue the joint venture, um, uh, is it has something to do with like the poor relationship? So as the accountant of this financial controller, was that decision actually was compromised by the poor relationship? Under the kind of situation, it's also a kind of non poor independence compromisation. All right. In situation 1, we ask you to advise. So you're supposed to advise what is the next course of action. The first one, in terms, this is a poor integrity. So if you don't tell, if you're an accountant, you don't tell, I think it's bad. All right. So you're just lying. And then then the result will not be the same, right? Then the situation 2, it talks about confidentiality. Under these circumstances, because there's a legal proceeding, then we will make exception for the confidentiality. Situation 3 talks about objectivity, which is we are supposed to make a decision based on what the objective we want to achieve. But this one, it can starting to become a little bit personal because you don't have good relationship. You decided to terminate. All right, over here, it's not acceptable. This question is June 2018. Just want to show you a variety of all those ethical issues. It says that Mr. Raja proposed DMX be appointed as company external auditor and is legally exempted from having its financial statement audited. Okay, it proposed that audit fee be linked to the reduction of inventory write-off after your recommended internal controls are implemented. Um, is it appropriate that you propose an audit fee link that linked to this action? It means that the audit fee, what you get, is subject to this decision. So this is where we talk about contingent fee. Okay, so this contingent fee is prohibited in our kind of practice, though, by the way, because it will influence how we make decision. So that is why this one, it means that like we will get more fee, So it's a self-interest trap. So that is why we cannot agree to this kind of fee. All right. So contingent fee is not acceptable. Other types of ethical question, all right, includes like this. Okay. The profile of audit engagement team was introduced to finance director. Finance director was surprised to find out one of his assistant is a relative. So this is actually a trap. Okay. So this is a familiarity trap. And then you proceed to evaluate. Okay. So, but it's just an accounting assistant. Is a very junior person. So you also need to discuss, all right, whether this is significant or not. Okay. And then recommend. So in this case study, there was insufficient information. So say that if they do not have significant influence and all this, we just have to make sure that is not necessary to remove, but if can, the audit assistant should not be assigned on the work. So make sure that it's not part of the job. Then it's okay. All right. So in exam question, they expect you to have some mature discussion on this. Other type of question, like December 2019, Mr. Jiang requested your firm partner to attend a meeting between him and the banker. Oh, so like you go together with the management, all right, to see the banker. Is it appropriate? Okay. So when you attend meeting together with the client, with the bank, it look as if like you are helping your client to apply the bank loan. You are providing or lending a support. So this is a kind of advocacy trap. Okay. So in this case, this is inappropriate. You should decline it. All right. So when they ask you to evaluate what is the next course of action, your answer has to be very precise. Other than that, in June 2021, you can see ethics questions are quite popular. You have quite a lot of questions. I just want to showcase to you what sort of ethics question that we ask. Director has offered to you to buy equipment 50% discount, 50%, Can? Cannot. This one is also an ethical issue because you will enjoy the discount. All right. So in this case, it's not appropriate. So you just decline. I'm so sorry. I cannot buy your equipment. All right. So I want to continue this. This is a very small chapter, but I'm going to assign you with So we're going to do a class exercise now. This is the link, and it will bring you to this page. So we're going to do a quick one. We're going to do a class practice now. In this class practice, only for 5 questions. Okay. So I'm going to give you like 5 minutes to do it. And then we will discuss the answer. All right. So please click the link and answer. So this is not an exam. All right, this is not an exam. It's just a class practice. All right. So once you complete, please click submit. All right, I'm starting to see responses coming in. Thank you so much for your participation. So once we complete this, I will quickly debrief, and then we'll go back to our lecture notes. All right. So we have covered the major part of our first session, which is the ethics. That's the most um, and most popular question tested. All right. So at the subsequent ones, we will move a bit faster. When it comes to quality management, we will cover a bit more extensive. All right. So we have about 27 responses. Thank you so much. So let me take a look at the results. At the moment, our results hover over 61%, all right, which is not too bad. So we just want to use these questions to discuss some of those key elements, all right, of ethics, all right. This is the areas that is mostly tested, right? We also have students who get 100%. Thank you so much. All right. It shows that there are some students who are really good in this area, probably have done some reading. So I'm going to debrief now. Wait, let me just share the page. So if you have yet submitted, you quickly submit. Okay, but let me do the debrief. All right, we're a bit tight on the time. So this is the score for our class, which is not too bad. All right. So you can see that some of you are more experienced, have more working experience in your firm, probably see this, oh, I know this case, it's very common, But thank you for your participation. You can see a lot of people have submitted. So far, we have like 50 of you. Okay, let me just debrief. So let's go through the first question. You are the audit senior responsible in auditing Charity Sweet Home for year ended 31st January 2024. CWH is a registered charity in Singapore. During your audit, you perform audit procedures to verify payments made for expenses and purchases. Uh, there are about 200,000 expenses made that you believe are fraudulent payment. What is an appropriate response to these discoveries? Okay, most of you got it right. Auditor should report to authorities because auditor has the duty to report. But some of you probably say, yeah, you should report, all right, to senior management. So the answer is very close if you look, all right. Should we report to senior management? Then after that, no need to report to authorities. But please remember that auditors, when you look in terms of money laundering and fraud, we actually has the duty to report. So the answer C is slightly better answer. Okay. Seek legal advice on the next appropriate steps. Um, but we already have a duty to report. All right. That is why C is slightly a better answer. All right. C is a slightly better answer. X is a private entity not listed in exchange and is an audit client of your firm. During the audit for X financial year end 31st January 2024, you discover a fraud in asset procurement audit testing. The audit manager advised that auditor is not required to report fraud cases to authorities for private entities. However, the firm should seek legal advice on the appropriateness of the response taken. All right. So, um, all right. Yeah, is it because you need to report to CAD? So in this case, this is a fraud, okay? But because this is a case study, we did not mention much about money laundering, all right? And you in private entity that is not listed, okay, the firm can actually evaluate whether is there a need to report to the police, the authorities like CAD and all that. All right. In Singapore, it's CAD. Okay. But it's just that when I write the question, I say to the authorities. In Singapore, yes, we report to the CAD. But for non-listed companies and all this, we actually given the opportunity to ask legal advice whether it's appropriate. In this case study, we didn't give sufficient information because there are sometimes our legal counsel will actually advise us against reporting one because of the sensitivity of the cases. All right. So under that kind of circumstances, in this case, we actually will seek for legal advice. So for those who are non-listed, non-PIEs, the firm actually are given the opportunity to first discuss with the legal first. It's not mandatory. It's not a requirement. Your audit client, company Y, a private entity, has contacted your audit manager recently. Y is a construction company specialized in building industrial buildings. CFO of Y seek technical advice from your audit manager. It's very common in our work that our client ask for our advice. Okay, but you don't forget the advice that you give, like technical advice, it may actually come back and haunt you because it will self review track. So can or cannot? Can give technical advice or not? That is the answer that you need to answer. So if you look, it really depends. As long as when you give this advice, all right, the client is responsible. So say for example, they ask, oh, how I do this financial reporting for revenue? So you show them, oh, you look at this one, SFRS International 15, which is revenue. You look into this standard say like this. Like that can. End of the day, the client do their own journal entry, but you don't do the journal entry for them. You tell them, oh, this is how you should do it, and then you decide for them. No, that one no. So you have to be very clear. All right. As long as you do not get involved in uh, the management decision, that is okay. Question 4, T is a listed company, your audit client since 2020. Your firm is the auditor for all subsidiaries, parent, and the group of for T. Last year, T acquired a new subsidiary, R. T requested your firm to provide accounting services to R. Your audit partner advised that your firm can accept this accounting service because team performing accounting service and the audit team are two separate engagement teams. Now, because this is listed, that is why cannot. That's why the answer is false. So there's a difference between listed and not listed. If it's listed, cannot. You cannot even evaluate, oh, I make sure two separate teams cannot. All right. Listed is not. That is because of the perception of independence in appearance. The public cannot accept this. That is why absolutely not acceptable. Question 5, referring to the case study, the source of ethical threat, the answer is self-review. Most of you got it. Well done. Okay, let's continue. All right, we have one question. Question 2, in what scenario that auditor do not need to report? Okay, there are sometimes there are cases, all right, whereby the information, all right, uh, uh, like involving criminal charges and all that. So it's a bit complicated. So usually we have to bring in the legal advisor. If even we want to report, how to report, the legal advisor will have to advise us, right? It's very tricky. Sometimes when you do audit, you may actually have discovery of some of those fraud cases, all right? And it may actually put your firm in danger. You also have to understand that. So because of that, usually we'll get the legal advisors. Okay, usually information that are very, very sensitive, information that will harm the firm. Uh, and uh, these are some of those information. If it's reported and all this, it will infringe or is prohibited in different law. Say, for example, the law say that, oh, there's a confidentiality. So the auditor is not supposed to also make this to public. So that is why we usually get the legal advisor to come in. All right. So sometimes cases can be very complicated. I hope I answer your question, Priscilla. But in exam, I hope it doesn't go to that complicated. Okay. Let's continue. We are a bit behind time. Okay, let's move on. All right. This is the subsequent part of part B. This is called risk of litigation. Yes, we do actually have people sue us. Yeah, auditor is not as it does not escape. So there is actually an expectation gap, meaning that they expect auditors to do a lot, but in actual fact, we have, although we say we do audit, there's only certain testing that we have done. So that is why at the very beginning, to reduce the risk of litigation, we must tell client what we actually do. So the discussion with the audit committee is important. All right. And your audit engagement letter, you must able to specify. And we do the work, we follow the standards so that we know that all the processes we do, it is acceptable by the standards. It's according to what all the members in ISCA is doing. But on our side, although we fulfill SSAs and all the SSQM, we as a firm, all the individuals in your firm must also able to demonstrate quality control. All right. It means that we actually do the work, we do emphasize a lot of quality. When there's a need, we need to also disclaim saying that, oh, we do this, but we don't cover this. We have to specify that. All right. So the person who draft engagement letters are very important people. Now you understand why your firm put a lot of effort that the engagement letter cannot be changed, has to be reviewed, by the senior partners because they have more experience in mitigating this kind of risk. And of course, more importantly is there are areas that we need to emphasize more. That is why we need to increase our professional skepticism in certain types of job. So expectation gap is when they expect us to do a lot of work, but in actual fact, we don't, right? And we need to deal with this, all right? We need to educate people to tell them that our auditors' work, we only limited to this only, okay? And we also need to make sure that when we do our work, we do it well, but at the same time, as we try to narrow the expectation gap, you will see the authorities also expect us to do some reporting like fraud, suspicious transaction. It's quite common. This is one of the practice question on negligence claims. Okay, it asks about the extent of auditors' responsibilities to shareholders, all right, and others during the course of their normal audit engagement. So we actually has a statute law that already drafted out, okay, saying that what is the responsibility of the auditors. So in our audit engagement, usually we will write there, all right, that this is our responsibility under statute. Okay. And inside the law of contract, generally we do have precedence case that protect us, but it's not foolproof because in the past we do actually have accounting firms that actually do a payout under litigation for issuing the wrong opinion, for consequential loss for the audit report that was issued. All right. How do we actually reduce it? Okay, first thing first, in the engagement letter, we need to spell out clearly what we cover, what we don't cover, what is the disclaimer, very important. The audit work must follow gold standard, okay, must be relevant to what we are testing, okay, must be planned, the audit planning should be discussed well with the client, all right. If there's any queries that is arising during the audit, we need to respond to it clearly, and then proper documentation, please. So to cover yourself from any cases in statutory defense, your audit working papers is the only document that can save you. Remember that. Management letter, usually this is a letter that is issued by the client, all right, saying that this is this is the letter that's issued by the auditor to the client to tell them that this is some of the issues has to be properly documented too. Okay, all the members in the team should know the standards well, very familiar, know their work, accept subsequent adequate training to carry out this. And usually accounting firms, they actually buy insurance. Okay, we do. Okay, we will go on to C. All right, this is part C, talk about quality management. So remember, we talk about SSQM. So this is where we will cover this area, right? So what sort of audit quality? So I think some of you in this classroom will probably get a lot of the answers that you wanted to, yeah, to know that why the firm is doing so much of this. This is the place that you'll find all your answers. Um, some of these pertaining to like audit quality. What's the audit quality? What are the audit quality that is specified in SSQM1? We will discuss here. How do we actually manage our audit risks, the firm's governance and leadership during the engagement? How do we manage? All right. And how do we manage the quality for those individual audit? We will discuss in this chapter. Right. Let's talk about begin by audit quality. So generally, when we are doing the auditing, there is this audit risk that we need to manage. Okay, that's where we do a lot of testing. All right, and when we are doing all this testing and all this, we will get the audit evidence, and then we will form an opinion throughout the whole process. All right. Uh, the primary responsibility, first thing first, lies on the engagement partner, and they must actually come out with this process. Okay. In audit quality, it talks about the whole process from starting the audit planning all the way until you sign off. How do we actually manage this? So it's about a project management. Okay. In that process, when we manage about inputs. It means that the people, the resources that we have, that we put into these processes, do we actually have good quality or not? The processes, how does the firm communicate, document? If you use e-audit, how does the system update, generate the report and all this? How do you know that the information that you input into your e-audit later is not changed one, is safe and all this? How can you ensure that? And then the outputs, all right, that coming from the audit and all this, the firm, the entity, it will all go to regulators one, So we also make sure that it must have the quality. How do we actually have the interaction? Is it properly documented? So there are also other areas that the firm also need to look at, like the laws, corporate governance, information system, financial reporting timetable, the audit regulation, your talent. There's so many factors that has a play and it has an influence on the audit quality. It's more than this actually. All right, it's more than this. So the text will only try to show you some examples of it. So in SSQM1, they say that we want a system that is put in place, all right, to able to design the quality management for audit and the reviews of financial statement, the whole processes. Most of the firms, they actually have a process. So when you join the firm, they will explain to you who is doing what type of audits, at what level, they will tell you that. How does the firm actually put in the people suitable for the job? Okay, the training that they need to go for before they can do this kind of job, uh, the reports that they need to issue, all the processes is in place. And when we look at audit risks, okay, we actually expect the audit firm to use this risk-based approach. So you must take a look at the risks and what sort of quality objective that you will have set. So in the audit risk, you must able to design the audit processes at the same time meeting the audit, quality objective that is set. Okay, then you know already the job is very difficult. You may actually have quality risk in certain areas. Then you must actually put in processes to address this quality risks, all right, at the very beginning, all right. And when we design all this, it must have a response. We have a problem in quality risk, then how you address it. All of this has to be addressed. So it could be dealing with some of those very difficult audit risk areas. Say, for example, the client actually has a lot of digital transactions, say, all right, a lot of e-transactions and all that. And we are dealing with digital transactions. It's very difficult to audit. then this could have a quality risk because your people do not know this type of audit, like digital transaction. Then this is already a quality risk. The partner, the engagement partner, are expected to address this. Okay, so you must follow the framework of EP 100 also by identifying the threat. See, same, and then you must evaluate, and then you must solve the problem. So generally, quality management is what that you go through in your firm every day. Okay, all the firms do the same. It is the process that you use to control the output of the quality. All right, that's the most important part. But it also means that the people at the top in the firm must able to take the leadership, all right, to drive this quality. So the firm must establish all those qualities objectives, all right, and the firm must demonstrate the commitment, all right, to set the culture for this. Most of the time, the firm actually has a lot of policies in place, put a lot of emphasis. Some of them also have training on this area. All right, most of the accountants that is working in the firm, they are very aware of this. There are many ways for the firm to do it, but generally it is how they have the commitment, how they demonstrate the commitment for this quality. All right. At the end of the day, in SSQM, they already said the leadership is responsible for the quality. It's not one individual. It is the whole firm, and the whole firm will follow what the leadership has set out for them. All right. Leadership demonstrate a commitment to quality, and then this has to be demonstrated. The structure must able to form the pyramid that allows the firm to do audits that can create quality, good audit qualities. All right. You need not only sufficient resources, the right resources to do the audit. So these are some of the criteria that has been set, and this is we call it like the quality standards for all audits in Singapore. The leadership, all right, it is the key priority, and they must demonstrate the commitment, which is the tone at the top. In terms of engagement, what is called a good example engagement. So the audit partner or engagement partner must able to give direction, all right, must able to give a good two-way communication that allows consultation. The people who are supposed to have leadership roles must able to supervise what are the process that is in place for us to resolve any disputes, how do we do review, the documentation, if we actually have professional judgment that is applied, how do we actually resolve it? All right. Do we demonstrate sufficient professional skepticism? So auditors are actually people that really have to do a lot of problem solving. So people who do audit must be very good in problem solving. All right. And all these are coming from the AEs, the audit engagement. We're talking about what is the objectives. All right. So from the beginning of the job, the AEs, audit engagement partner, are supposed to talk about how they want to do the audit, and the resources. It means that the audit staff, how much time, all this, he must able to steer and lead this, right? Of course, there is a lot of monitoring that need to be done during the audit. All right. So during the audit, this is where the communications takes place. If there is any deficiency and all this, we expect immediate appropriate action to be taken. So there is a response that is expected. All right. If there's any findings and all this, how this escalation is done within the audit team. All right. And if there is an investigation to be done, how this is going to be done. So audit quality requires good documentation to support. So it is no point you say that we do quality management, but I cannot find any documents to show that the processes is indeed in place. So the documentations, how you actually input into the e-audit, or your document audit working papers are important so that we are able to showcase this, all right, that the work is already done. And this is how we do it. Why we arrive at this conclusion? We must able to document and support it. In individual audit, how do we actually do quality management? We do a lot of reviews. Okay, and when we do reviews, is to see whether if there is another person who do the audit, will they arrive at the same conclusion or not? So over here, we look at we follow the standards. So all these auditing standards are not created by the firm; it's created by the governance. All right, like SCAQ. So we follow the gold standard. Okay, and then the audit report is also issued based on the circumstances that we are in and based on the audit evidence that they collect. All right, so the quality management is actually based on these few tenets. Managing and achieving quality talks about who is the person that is responsible, okay, the quality reviewer that we're going to bring into in discussion. So generally, the engagement partner it is the person that is responsible for the quality management for that job. So whichever job, all right, he is responsible. So when Accra comes to do the practice uh, management review, practice monitoring review, uh, they will actually, yeah, deal with this engagement partner. Okay. And the engagement partner, when they do the audit, all right, the audit work papers and the audit reports, draft audit reports, all this will be reviewed by another partner. It's called an engagement quality reviewer. Some firms, they actually have a name called second partner. Some of them call it quality partner. Some of them call it concurring partner. Whichever name you use is actually referring to this. So there are some criteria. You cannot become a member of the engagement team because there will be self-review track. But this partner also should be a very experienced, must have the competency and capabilities. And some firms, they even have somebody more senior than and more experienced than the engagement partner sometimes. Must comply to also ethical requirements that is needed so that the attitude and the behavior is also consistent and must comply to the law if there's any if it's relevant. But it cannot be an engagement partner in the past 2 years. All right. That is because it will actually trigger self-review track. Engagement quality review. All right. The roles, what they do is they review to see whether is there any areas that has omitted, end of the day, they want to see whether the conclusion is it in sync with the conclusion that was uh, suggested and proposed by the audit engagement partner. That is the most important part. Of course, there are also other areas that they look out for. Say, for example, like any things that is omitted. All right. On quality management issues, is quite a popular question. All right. It was tested once before. At the time, it just started on SSQM. All right, let's take a look at the practice question. So this practice question is extracted from our workbook. All right, it says that you are currently carrying out audit in Queenstown manufacturer. You are unhappy on the inventory valuation policy and have raised the issue several times with the audit manager. Audit manager has dealt with the client for a number of years, does not see that you are what you are making a fuss about. Audit manager has refused to meet you on site to discuss these issues. Former engagement partner of Queenstown retired 2 months ago, so it looks like your audit senior, you are left hanging. This is the quality management issues. Does it happen in the firm? Yes, it does. But now with SSQM, it looks like it's a violation. Previously, if it's done like this, is it wrong? Yeah, there's no standard. But now we have SSQM. So it means that quality management, you do not meet the standard. So actually, we need a engagement partner. First thing first, all right. It should be appointed so that it has sufficient supervision. At the same time, you see that the manager and senior also have conflicting views. Under this kind of situation, sometimes you have arguments, different views on certain issues within the team, and or with your technical desk or with risk management. You have to resolve this before you sign off. no matter how. So you cannot have any dispute or disagreement or conflicting views not resolved on before signing off. It's not permitted. So in SSQM, we have already highlighted this. This question talks about uh, zigzag, all right, has 20 partners, all right, it does audit, partner assign ultimate responsibility and accountability for the AE system of quality management, have recently resigned to take up a position in industry. Partner has not been replaced. Prior to departure, partner was in the process of implementing system of ethical compliance. All right, Orchard Trading is the largest client. A new engagement partner has been assigned to the audit. As the previous partner has retired, the fee for the audit work remains the same. All right, but there's additional work to be done. This one is a quality risk. First question is easy. It asks you 8 components. This one, SSQM already right. So that one, no problem. Identify and explain quality management issues. This one, you're talking about the job on this orchard. All right. And also you can see the engagement partner. So this is the 8 components that you can find in the SSQM. All right. Governance, resources. So this one we have already covered. In this case study, all right, you have 2 issues. First is the leadership. All right. There is no audit engagement partners that is in charge. And then this one, they halfway implementing quality management, and then partner just resign. So you have an issue for the engagement for Orchard. This one, they got a budget, but now their budget probably bursts up because you don't have enough time, because you have to do more work, because there's a change of computer system. So under this kind of circumstances, uh, I mean, you can discuss with the client to have audit related fees, yeah, because it's actually extra work. But generally, it is a quality risk. It is a quality because you don't have enough time, or maybe you don't even have the specialty or expertise to do the testing of the new computer system. So because of that, this kind of pressure is inducing the poor quality audit risk. Okay. And also, ISQM also talk about ethics. All right. The independence required. All right. To be aware of the responsibilities. All right. Of not to avoid this kind of breach. Has your question tested before in this case? So I just want to go straight to this case. So I just summarize for you. In this case, um, the the there were some findings after the audit report was signed off. There were some findings, and these findings is related to a fraud. It resulted that the accounting entity wished to change the financial statement. So because of that, the auditor now has to do the extra work to look at the new financial statements. All right. So this is this case that talks about. But the focus on the question is that he asked quality control procedures. So this question is very vague. They say quality control procedures. If you don't study well, you do not know what the question is asking. Generally, they're asking for quality review. Now, because the case study it is regarding a subsequent event that's after the audit report is already signed off, then is also a quality review. But this kind of review we call co-review because the co-review is done after the sign off. Okay, so usually jobs that's already signed off, the firm usually will have peer review, all right, or another audit partner that is independent from the job to do the review, all right. So that is one way. So another quality control that they will do is that they will do the audit on the revised financial statement. This is the hot review, meaning that the changes that they want to make, because there is findings after the audit report that was signed off. All right. So hot review means you do the review before the sign off. This one is the before the second sign off. Hot review and cold review both are also engagement reviews. It's just that it's placed on different time. Hot review is usually placed before the audit sign off. Cold reviews are jobs that is selected by the firm. Sometimes if you belong to an international franchise, is selected by the international franchise. They will come and do the reviews for those jobs that is completed. That is called the co-review. All right. So both also exert or assume the same qualities, but it's just that it's done on different time. So that is co-review. So this is about acceptance. Usually in acceptance, we actually communicate with the predecessor. Yes, we do. So let me just quickly go through with you why people change auditor. Uh, Many reasons. Audit fee. Sometimes it's required because of audit rotation, because of familiarity trap. Right? Sometimes it can be disagreement, could be many reasons. So usually it's being approached by a prospective client, and the firm will actually do a review, all right, and they would do a proposal. So usually when they ask for a tender, it's called RFP, request for proposal. In the proposal, then we will submit a proposal, and after that, because of the change of the engagement, the incoming or the prospective auditor can actually communicate with the predecessor auditor and ask them for the reason why they do not want to continue as their engagement uh, service provider. You can ask. And is there any reason that they should not, take on this appointment? Yeah. So usually is in writing, all right? So that is formal, all right? But there's some student asking, what happened if the predecessor auditor did not reply? Oh, this is a sign to tell you that there's something that they cannot tell you, you know. But this is a very serious matter because before you accept the job, usually the leadership of the firm will want to assess the risk, of the job. Okay. These are also the matters that they will also consider besides the fee, the circumstances of the change of the engagement, whether the client also has ethical integrity issue. Do you have the ability to perform the engagement? Do you have the people? Do you have the right people? So this is some of those areas. Okay. This is the last chapter. Going to take a bit extra time because class started a bit late today. So let me just quickly go through this. All right, so this is other types of job. These are all audit related. Anyway, in the accounts is required for disclosure. So it means that it is part of audit, but there are some companies who are listed, they need to issue, say, for example, like interim. So when they issue interim quarterly results, the auditors are expected to do extra work just to review the numbers. There are also sometimes compilation work. Sometimes it also talking about putting or compiling some information to put inside the prospectus. This is all audit related. There are also other types of work that the auditor may do. They may actually ask them to do prospective financial information, which ask them to do to review the forecast. So this is a separate piece of work. Okay, so that one is non-audit. All right. Client also may have internal audit function. Okay, so we just go cover a little bit what is internal audits work, and what happened if there are some of those work that is outsourced by the client. How do we actually do the audit? It has an impact, by the way. You are expected to also do the audit, although the work is actually outsourced. Okay, end of the day, as long as it has an impact on the financial statement, the audit is required. Okay, so it makes the audit a little bit more complicated. Let's cover these areas. Let me dive straight to the contents. Okay, just hold on. So this is the kind of assurance, all right, that we do. We have limited assurance, okay, work. So there are some of the work that are very specific, that is only reviewing on certain parts, all right. So this is also the kind of work that we do in limited assurance. Sometimes because of the objective that we want to achieve or the assurance you want to give, they ask you to look for something. It could be just nothing has come to our attention, all right, but it's a limited work. So the testing or the work they do is also limited to the scope that they agreed with the client. Okay. um like in this kind of limited of scope, how do we actually do that? So some of those we actually also set maturity. What are the things that we check? What are the things that we don't check? But unlike auditor, if you are doing an audit, okay, um, the we need to set like what is called maturity, and that that we can accept and what we cannot accept. That is called the material misstatements. No? Where else we look at limitation of scope, limited assurance is slightly different. Okay. They usually uh, does not require to set a materiality. All right. They focus on whatever what the client asked them to do. Okay. So the work are very specific and they agreed with the client. So in audit opinion, this is the audit opinion that we get when we do our audit opinion. It could be qualified. It could be worse than that, which is the adverse conclusion. So we will cover this in part F. All right, we'll cover this. So I do not want to really dive deep on this because we have not covered part B. So it's a bit too premature to go very deep on this. Pervasive means that it is not the problem doesn't contain in just one area. It's like connected to the whole financial statement. So it makes the problem become very uh, the effect is all over the whole financial statement. So because if it's pervasive, that is why you can see the conclusion is adverse. It's the worst of conclusion as compared to qualified conclusion. Okay. Of course, the worst kind is you're unable to form a conclusion. That is the worst kind of opinion. So this is those who are doing audit. All right. Those who are doing limited assurance, it really depends what the work that the client wants you to do. All right. So the opinion is that they ask you to look for this, got or don't have. You just tell them. So that is very much agreed upon with the client. This is some of the audit related jobs, right? Like review of interim financial information. So those who are listed companies, you will see that there are there are some uh, uh, additional work that need to be done. Okay, so people who do this kind of job also expected to adhere to ethical requirements. Same, all right. It's just that it's similar to audit, but it's just a review. It's not an audit. So that is why we just do high level review, and they do a lot of analytical review that time. They will do a little bit of inquiries to understand the changes and all that, and see some of the announcement that they've made, what are the important events that have happened, and they just want to see whether the interim reports that they do is reasonable. That's all. So it's very high end. So this is interim reporting. So um, when we do interim reporting, this is is a audit related services. All right. So usually it is the team will actually who's doing the audit, they will do this. When you talk about the engagement planning and all this, when we do the auditing for the job, the planning is expected. So this we will actually cover for reasonable assurance job like auditing. We will cover this in part D. But if you look closely comparing limited assurance and reasonable assurance, you can see that there is actually a significant difference here. All right. Limited assurance are basically looking at the particular engagement circumstances. We just do enough, all right, to meet what the client wants us to do. But reasonable assurance, sometimes the work that we need to do can be very excessive because we do not have a choice because we want to form the conclusion and we cannot finish the work. We need to get more information and all this. So because of that, you can see we need to continue to pursue to obtain sufficient and appropriate audit evidence to form the opinion. And you can see that in terms of the evidence also is very different. All right, you can see reasonable assurance because we wanted to assess risk of material misstatement. So it really depends on where is the material misstatements. That is why the audit evidence also can be a lot. The procedures that we design, it really depends on what is the assessment on the risk of material misstatement. So in part D, we cover most of this. All right. Subsequent events, all right, in assurance report is also a big element. All right. In part D, we will cover this. Okay. Subsequent events is also a very popular topic. When we assess our clients' risk during audit planning, this is the area of business risk that we will cover: operational risk, financial risk, and all that. So it will give us an understanding where is the risk of material misstatement. Okay, so the client's risk that will have a big impact on our audit risk. It really depends on the industry they are in. All right, what sort of business they do, their transaction. So from the risk assessment, we are able to gauge that. Okay, in SSA 260, talk about the communication on those significant findings. So it's a requirement for us to escalate some of those significant findings to those charged with governance. So it is the job of the auditors to inform them. Hmm? Prospective financial statement is like you do forecast. It's called prospective. Sometimes auditors are being asked to do this, but this is considered as a non-audit services. All right, and the level of assurance is very limited to the work that is needed to be done, which is the cash flow forecast or whatever forecast they want us to do. Sometimes client asks us to do prospective FI because they wanted to put in the prospectus. Yeah. Sometimes they want to invite investors to buy their shares. That is why they use this, all right, for the purpose. In auditor, uh, to look at PFI, they need to understand what's the use, for what purpose, you know. But this is some of the example. Profit forecast, sorry. Profit forecast is one of them, all right, for listing purposes, capital expenditure, when you maybe ask for bank loans, all right, they need this cash flow forecast. Say, for example, you are asking for working capital financing, you know, so they will do limited work just to serve the purpose of that prospective FI. Internal audit, all right, we put into this discussion because there are times external auditors actually place reliance on the work performed by internal audit. Okay, and the internal auditor, they do audit, but you can see that they do all types of audits for that particular employer. They do for their own, but the things that they cover is actually bigger. All right, it's not limited to financial statement audit only. And if we want to place reliance, say, then this is the standard that we need to use to guide us, SSA 610. All right. We need to determine what are the work that we want to place reliance, and we must able to ensure that how it actually meets our purpose. All right. So the standard actually talks about this. We can use, all right, but make sure the documentation that we have in our audit working papers actually included, all right, and it must able to put together in our audit working papers to help us to form a conclusion. Okay, so this is one questions that I want to bring to your attention. So this question that's about internal control. In this question, um, in this December 2020 question, this question actually asks about internal control. So I would like you to take a look at this question because this question, it shows a lot of flaws in their sales processes. If you read, this question has a lot of problem. And the question actually asks you to guess what causes this internal control, how to improve internal control. Now, this kind of question also can be tested on because uh, they are focusing on those business environments that has an impact on our audit processes. So you can see that the auditor already identified this is the audit issues. All right, you see, did not seek reappointment. All right, excessive sales commission. All right, goods return that is not cannot be found, unusual credit notes, there's issue, and then pay out in cash. So this is the four audit issues. Then you see the question they ask. In relation to the excessive commission, explain the control deficiency. Why? You see, the question it really tests you on your maturity, how much you understand about internal control. It's just talking about operational risk. Okay. And then they ask you for test of details, right? Then they move on to the next issue, which is excessive goods. Then you can see excessive goods. They also ask you what's the possible reason, ask you the control procedure to improve, how do you test, and then the credit notes. Then you can see for excessive commission, you explain control deficiency. All right. So you can see that calculated because they base on the team that is based on the sales report issued by the sales team. So the report could be not properly supported. It may not be genuine. All right. That's why the sales commission is excessive. Recommended control, it should be based on the sales invoices that is issued by the finance after checking. All right. Which is properly supported by goods delivery. Best if based on cash collected, after paid. So confirm, And of course, they ask you for test of details. So this one, I don't want to focus so much because we will cover in part D. All right, on the audit procedures. You can see like excessive goods return. All right, they'll ask you what is the explanation. You can see um, they say it could be based on the quantity recorded in the sales order. Okay, control procedure, say you should get a copy of the from the system, all right, and then make sure that this is actually the goods that is delivered. All right. So if customer did not order, then it should not follow that copy. Test of details. All right. Uh, how do you test this? This one we'll cover in part D. So I just want to show you like what sort of question will be tested. And they want to test you the maturity of the candidates on how to deal with this kind of questions. All right. So this is like for the credit notes, they talk about the excessive credit notes that is issued. So generally, the credit notes paid to be paid out in cash is not acceptable if you don't provide cash refunds. There's a poor internal controls. So to improve it, the best thing is you cannot pay in cash now, and we need to have a policy on how we want to issue credit notes. All right. So sometimes the examiners they actually do test you on this. So this will conclude the class for today. I actually do prepare one practice question, but we are a bit short of time. So what I will do is I will give you the link. You can complete it after the class. All right. So I will take a look at the results. Okay. And I will follow up on this. All right. On the debrief. I will follow up on the debrief. All right. On this. So I would like to end the class now. I'm sorry I've taken a bit slightly longer. So you complete this class practice at home. I will do the debrief. I will follow up on the debrief at a later time. All right. But at the moment, I want to end the class. You complete this practice question at home. All right. And I will do the debrief at a later time. All right. So thank you for joining my class today. Thank you so much. And I will see you in the next session. Thank you.
The recording has stopped.